afternoon. Welcome to daily currency update from the currency desk. On the second trading session of the week, we have largely sideways movement in the dollar against the rupee. It has currently taken a sideways range of 55.40 to 55.60 in the spot. This INR is majorly holding on to its gains due to the expectation that there would be some monetary stimulus provided from the Federal Reserve of the United States and from the ECB, that is the European Central Bank. Both of these central banks are due to bring in their monetary policy in this week. Federal Reserve monetary policy is expected on Wednesday and that of ECB is on Thursday. So these key events would be looked keenly upon by the investors so as to know what the market direction or trend would be. But beyond that, the market is largely sideways. Today we had the RBI policy data coming in the afternoon. As per expectations, RBI has kept key rates unchanged, though it has reduced the statutory liquidity ratio, that is the SLR, by 1% from 24 to 23%. This would again inject some liquidity into the markets, but then not that much as expected. So all in all, due to the inflation pressures, the RBI is not bringing in any major monetary stimulus. This continues to remain slightly bearish for the Indian rupee. So now the only support for the Indian rupee is the US Federal Reserve and the European Central Bank's monetary stimulus expectations. So if these expectations are not met, we could again see higher levels in the dollar against the rupee, which could be up above 56 levels. Now these expectations are higher or more hyped mainly because we had the ECB head Mario Draghi statement coming in last week, based on which he has promised to support the euro with all the resources possible and take the requisite steps so as to ensure that the European situation does not go out of hand or worsens. Today we have all the major manufacturing data around the world, including UK, Europe and US. Already we had the manufacturing PMI data coming in from the Japanese front, which was at the lowest since a year. So since the July PMI is much lower, we might see some depreciation in the Japanese yen, but right now the Japanese yen is holding on to its gains based on the expectations of the monetary stimulus by the Fed. So if we have no monetary stimulus from the Fed and the ECB, we could well witness the yen appreciate against the US dollar. Right now the pound is trailing the euro. Yesterday we had some major upside in the euro against the pound, but then this upside is expected to correct. In terms of technicals, we can well see we are seeing a bullish to sideways trend in all the four pairs, that is the dollar against the rupee, the euro against the rupee, the pound against the rupee and the yen against the rupee. All currently are at fresh buy above the first resistance. The key resistance for dollar has been crossed, that is 56.61. We can expect some upside from here on up till the next resistance level, which is of 56.07. The yen, which is largely trailing the dollar on the upside, can also be expected to rally up till 72 levels in the spot market. We can also witness some sideways movement in the euro against the euro and the pound against the Indian rupee in the range of 67.96 to 68.22 in the euro, and 87 to 87.56 in the GBP against the Indian rupee. Thank you.